years underneath 3%, barely 299. Couple of main bear from RJO Monday morning, 11:30, last day of the month. Notes and bonds higher, continuing slow drive to lower yields. 10 years are down to 221, 30 years underneath 3%, barely 299. Couple of major props. General unease over the Chinese stock market over the Thanksgiving holiday. Articles in the paper today, the Wall Street Journal, highlighting the budget basically under control. Tax receipts are very high, and the U.S. Issuance expectations for 2016 are down as much as 25% from last year, which is a huge number. Much less supply. Obviously, it'll be easier to keep the bonds, going lower in yield with much less supply. Also, we have very little inflation, almost a disinflation situation. Crude is going to end the month down 8-9%, I think. Rather dramatic amount, and everything looks pretty good on the inflation front. In fact, that's probably what's holding the Fed up, or has held the Fed up. Expectations are just continued very low. Yellen speaks Wednesday, so that should be interesting. We get a little read in front of the D's Fed meeting, what she's thinking. Draghi is expected to lower European rates on Thursday. So, the dollar again, it's been propped up by expectations of possibly lower European rates. At the same time, expectations of higher short-term rates finally here in the U.S. What else? Okay, so Wednesday, Yellen speaks. It is, as I mentioned, the end of the month. Of course, Friday will be the first Friday of the month, so we get the decent unemployment numbers. If these numbers are good, pressure will really be on to finally move short-term rates off zero. What kind of effect will this have on notes and bonds? Probably not much. Again, for the other reasons, the big picture about inflation, I think, is primary. The secondary supply, notes and bonds are going to be able to take this in stride. The other thing I think that could really throw them, is the stock market that pushes through recent highs and all-time highs on the indexes. Stocks, as you know, are waffling here. Opened higher today, got hit kind of hard. Really going nowhere fast as long as they're basically running in place. I think notes and bonds could creep higher this week. We'll see. As far as important economic numbers, PMI manufacturing index comes tomorrow. Construction spending, ISM manufacturing index. Wednesday we get the ADP employment report. So I guess on Friday's number. Again, Yellen speaks Wednesday. Thursday we get factory orders and the non-ISM, and then Friday morning the big payroll number. I can reach at 800-500-2461 to discuss any futures market. Please give me a ring. Thank you. Futures and options on futures may involve substantial risk and may not be suitable for all investors.